Hello, I am Cem Yasar Ozey. Welcome to Daily Market Note. The date is October 10th, 2025. Today, we will quickly and clearly discuss how the data darkness has caused the geopolitical risk premium to diverge in two directions, and what this means for stocks, bonds, currencies, commodities, and the Turkish markets. Let's start with today's summary. The US government shutdown is disrupting data flow. The Fed's sight horizon is narrowing. Nevertheless, markets maintain expectations of a total 50 basis point cut in October and December. News flow regarding a ceasefire in Gaza is reducing the geopolitical risk premium. Oil is rallying, and after a record test in gold, profit-taking is occurring. The dollar remains ahead in risk aversion. In Turkey, BIST 100 is in skidding mode, 10,700 is a critical support. On the macro and geopolitical front, important macro data are not being released in the US due to the government shutdown. This puts markets in a data blackout. The picture for the Fed is unclear. Visibility diminishes the accuracy of policy steps, and if uncertainty premiums increase. On the other hand, there are signals of easing in geopolitics. Messages regarding the first phase of a ceasefire, including the release of hostages in Gaza, have lowered risk premiums. The result? Weak oil, profit-taking after a record test in gold. But the picture is not entirely smooth. While the Russia-Ukraine front remains tense, China's restrictions on critical technology and rare earth elements could generate new tensions in supply chains. Macro and geopolitical factors create a two-way tug-of-war. Easing expectations in monetary policy support risky assets, while geopolitical easing reduces safe haven demand. Volatility can quickly shift from low to high. In the stock and bond markets, the US and European indices are experiencing a controlled pullback after reaching peaks. While the theme of artificial intelligence remains strong in the medium to long term, there is a clear need for breathing room in the short term. Momentum indicators suggest this. Selectivity is key here. Instead of indices, quality baskets that generate cash and have visible growth are emerging. On the bond side, we see a slight upward slope in the 10-year yields. The message is clear. Extend duration gradually, not all at once. Reducing positions during data and central bank communication days, then rebuilding afterward, is healthier in this regime. When risk appetite in the foreign exchange markets fluctuates, the safe haven reflex kicks in and the US dollar diverges positively. The upward trend in the DXY and the downward pressure on the euro-dollar parity persist. Reactive rises are considered selling opportunities. Movements favoring the dollar are also evident in the sterling dollar and dollar yen pairs. If we look at commodities and crypto, gold is consolidating after testing $4,000. Profit-taking is occurring while the main trend remains strong, but momentum is weakening. Oil is retreating due to the diminishing geopolitical premium. Headline risk remains high, and it will continue to move with news. In industrial metals, demand signals from China are supporting prices. In crypto, headline flow has high beta. Success here comes with disciplined risk management. Stop loss, take profit, and leverage control are essential. When we look inside, inflation is high on the macroeconomic scale, and the central bank is hawkish. Nevertheless, CDS remains below 260, indicating limited systemic risk perception. Industrial production is strong annually. Activity is lively. The BIST 100 continues to patinate, approximately 1.2% weekly decline within a narrow band. Critical support, 17,000, psychological anchor. Lower support, 16,000 resistance, 10,900, 11,000. It is difficult to regain momentum without surpassing these levels. USD TRY is gradually rising, support at 41.70, resistance at 41.90 and 42. The bond curve has shifted upward after September CPI. In the 2-year and 10-year maturities, we are in a high-level regime. If we come to our tactical strategy portfolio, stock. Instead of the index, a trio of quality plus cash flow plus visible growth. Be sensitive to guidance revisions during the earnings season. Surprises can quickly move the price. Bonds gradually extend duration. Lighten positions before data speech days, then rebuild afterward. Foreign exchange. Leverage is low on days favoring the dollar. Review hedge ratios weekly. Commodities. Portfolio insurance approach for gold. Do not take aggressive positions in oil without trend confirmation. Crypto. Keep the rulebook clear. Stop loss, take profit, leverage, discipline. Write decisions into the plan and stick to the plan. This is today's market note. This content is not investment advice. It is for general informational purposes only. Make your decisions based on your own goals and risk profile. Don't forget to follow Cem Yasar Ozey for regular notes. I look forward to your comments and questions.